right. I'd like to call this meeting of the Standing Committee on the Alberta Heritage Savings Trust Fund to order and welcome everyone in attendance. I'm Tanny Al, I'm the MLA for Fort McMurray Wood Buffalo and Chair of the committee. I'd ask that members and guests at the table introduce themselves for the record, and then I'll call on those joining in by video conference. And we shall begin to my right.
Garth Rotzel, MLA, Vermilion, Lloydminster, Wainwright.
Gary Smith, AIMCO.
Justin Lord, AIMCO. Stephen Thompson, Treasury and Risk Management for Treasury Board and Finance.
Brittany Jones, Treasury and Risk Management for Treasury Board and Finance.
Tim Lam, Auditor General's Office.
Samir Kayanda, MLA Calgary Alba.
Rafin Koenig with the Office of Parliamentary Counsel.
Warren Huffman, Committee Clerk.
And we will now go to those who have teleconferenced in, starting with Mr. Wright. Mr. Brar, I please ask that you turn on your camera and unmute yourself, please. There you go.
My name is Gurinder Brar, MLA from Calgary Northeast.
Thank you so much. Mr. Weed.
Ron Weed, MLA Grand Prairie Wapiti.
Ms. Armstrong-Hominick.
Jackie Armstrong-Hominick, MLA for Saskatchewan.
Thank you so much. And Mr. Ellingson.
Fort Ellingson, Calgary Foothills.
Thank you, sir. For the record, I'll note the following substitution: Ms. Armstrong-Hominick for the Honorable Mr. Boychenko, and Mr. Ellingson for Mr. Kozowski. All right, we have a few housekeeping items to address before we turn over to the business at hand. Please note that the microphones are operated by Hansard staff. Committee proceedings are live streamed on the internet and broadcast on the Alberta Assembly TV. The audio and video stream and transcripts of meetings can be accessed via the Legislative Assembly website. And those participating by video conference are encouraged to please turn on your camera while speaking and mute your microphone when not speaking. And members participating remotely who wish to be placed on the speakers list are asked to message the committee clerk, and those in the room should signal the chair or the committee clerk. And please set your cell phones and other devices to silent for the duration of our meeting. All right, let's go to the agenda, shall we? Draft agenda was made available to all members. Does anyone have any changes or additions to the draft? I'm looking in the room and online. Anyone have any concerns, questions? We see we have some good friends on just logged on. Mr. Stefan, will you please introduce yourself? You have to take yourself off mute, sir. A lawyer, an accountant. There we go.
MLA Jason Stefan, read yourself. Very happy to be here, Chair.
Thank you, my good friend. You saved yourself from a jab from me there. So, all right, back to the draft agenda. Does anyone have any concerns or questions about the agenda? Online or on the phones? I see not. If not, would someone move that the agenda be accepted? Mr. Rosewell moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the proposed agenda as distributed for its June 27, 2025 meeting. All in favor in the room, please say aye. Aye. All on the phones, please say aye for supporting the agenda. Thank you. Does anyone disagree with this? Perfect. That motion is carried. Thank you all so much. Next, we're going to go to the approval of the minutes. We have the draft minutes from April 14th, 2025. Does anyone have any errors or omissions to identify? In the room, on the phones? If not, would someone move that the minutes be approved? Oh, Mr. Rosewell, he's a trooper. He moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the minutes as distributed of its meeting held on April 14th, 25. All in favor, please say aye. Aye. On the phones, please say aye.
Aye.
Oh, that's half-hearted, isn't it? All right. Any noes? Didn't think so. That motion is carried. Perfect. Honorable members, we now turn to the 2024-25 annual report in the Alberta Heritage Savings Trust Fund. Committee clerk has received a draft of the annual report from Treasury Board and Finance on June 24th. That report was made available to the committee members on the internal website. I'll note for everyone's information, this report is confidential until it is approved by the committee. Before we hear from our guests, I'd like to briefly review the committee's mandate with respect to the fund's annual report. As stated in Section 6.4B of the Alberta Heritage Savings Trust Fund Act, one of the functions of this committee is to approve the fund's annual report. Furthermore, Section 16.2 of the Act requires that after the committee approves the annual report, copies of the report be furnished to all members of the Legislative Assembly of Alberta and the Clerk of the Assembly on or before June 30th, after which the report shall be made public. At this time, I would ask Treasury Board and Finance officials to provide an overview of the annual report, followed by remarks from AIMCO, and then we're going to open the floor to questions from committee members. So with that, please, there are our guests. The floor is yours. Ms. Jones.
Thank you, Mr. Chair. Good afternoon, committee members and guests. My name is Brittany Jones. I'm the Director of Investment Strategy with Alberta Treasury Board and Finance. I'm joined today by my colleague, Mr. Stephen Thompson, who's the Acting Assistant Deputy Minister of Treasury and Risk Management. We're here to present the final results of the Alberta Heritage Savings Trust Fund for the fiscal year 2024-25 on behalf of the department. It's actually a very positive year this year. The value of the fund increased by $4.2 billion. That's from $22.9 billion last year to $27.2 billion this year. And again, this year, we're pleased to report that it has established another new all-time high. The growth in assets was driven by two main factors. First of all, the absolute returns on the investment portfolio were strong. As of March 31, 2025, the one-year return on the Heritage Fund was 9.7%. This resulted in gross investment income of just over $2 billion and net investment income of $1.9 billion. As a reminder, the Alberta Heritage Savings Trust Fund Act was amended in 2023 to retain income, and so all of that income was retained in the fund. Secondly, the increase in the net asset value of the Heritage Fund also reflects a contribution of $2 billion that was made later this year. This allocation was made in budget 2024, and it was transferred in the fourth quarter, so you will see that show up on the financial statements this year. The returns on the fund are also noteworthy over the longer term. So the Heritage Fund has two main performance targets that are articulated in its statement of policies and goals, and these are both measured over a 5-year period. So the first measure measures the real return on the fund to make sure that the fund is retaining its purchasing power over time. So this particular performance objective is CPI plus 450 or 450 basis points or 4.5% over that 5-year period. The second is to outperform a passive representation of what the portfolio looks like over that 5-year period by a margin of 1%. And I'm pleased to report that for this latest 5-year period, the Heritage Fund has exceeded both of these objectives. The Heritage Fund returned 9.6% on a 5-year annualized basis compared to the 7.4% real return target. Also, the fund surpassed its 8.5% passive target. So that's actually a 1.1% return that's higher than the passive benchmark. These results signal that the Heritage Fund is growing in real terms and also that active management is adding value to the fund. During the fiscal year, most asset classes contributed positively, and our colleagues at AIMCO will dive deeper into that in a moment. The returns were led by well-performing equity markets, with equity investments returning 14.2% in 2024-25 and generating more than $1.5 billion in income. Fixed income and interest-bearing securities also contributed positively. They returned 7.5% and produced income of $222 million. Inflation-sensitive and alternative investments are usually very consistent contributors to the fund. This year, they returned only 7.4% in aggregate. That was mostly pulled down by real estate, but infrastructure did return 12.9%, which is quite strong. This asset class was able to contribute almost $300 million in earnings. And investment expenses, while higher on an absolute basis, actually declined as a percentage of the total value of the fund. So they are trending positively in that direction. So this year was a period of significant growth and change. In addition to strong investment performance and income generation, other important developments to enhance the fund value have also made considerable progress, and that includes the creation of the Heritage Fund Opportunities Corporation, and we will have more to say about that in coming quarters. So overall, this past year has been transformative, and the fund is growing in both size and in relevance, making the Heritage Fund an even greater source of pride for Albertans. So we very much eagerly anticipate its future. This concludes my prepared remarks. At this time, I'll pass it over to AIMCO.
Thanks, Ms. Jones. Gary Smith from AIMCO. Thanks for having us here today. And today I'll provide a few updates on AIMCO and the Alberta Heritage Savings Trust Fund, and Justin will pick it up when I'm done to talk a little bit more about results and market matters. I'll start off with some organizational updates. First thing to note is the last time we had a meeting, we announced, I think April 14th, we announced that John Walsh had been appointed Chief Legal Officer and Janice Gutso had been named a Chief Human Resources Officer. Indeed, John's first day on the job was the date of the last meeting, and I'm happy to say that in the 2.5 months since then, he's jumped in with both feet and is making a very strong contribution on a whole range of files. The remaining executive position to be filled is that of the Chief Investment Officer, or CIO. I believe the last meeting it was said that search had just begun. That search is now well and truly underway, and we expect to conclude that search and make an announcement in the near term. In the meantime, Justin Lord, to my right, remains head of public markets, and Peter Teddy is the acting head of private markets. One other announcement regarding the corporation worth noting is that a new board member was appointed, Sandra Lau. Sandra is well known to folks in Alberta. She worked at AIMCO for over 20 years. She was Chief Investment Officer for a period of time, and she served Alberta with distinction over that period. We very much welcome Sandra's involvement with the board. She'll bring a level of knowledge of the Alberta environment and AIMCO to the board that I think will be helpful to that body as it governs the organization. Second point I want to speak about is business transformation. We continue to progress on business transformation, which is our buzzword for the major overhaul of our key investment and accounting systems that we're engaged in at this point. What this will do is it'll lead to improved analysis and decision-making for clients and for various operational improvements. So we're very excited about that, and we continue to engage with clients, including our friends at Treasury Board and Finance and the Heritage Fund on various matters related to business transformation, the idea being that we want all parties along for the journey. As Ms. Jones alluded to, the Heritage Fund Opportunities course is standing up, and we're relating to both Treasury Board and Finance and the HFOC regarding portfolio reporting matters and various other client matters that link in through business transformation. Finally, I think at the last meeting, there was quite a bit of talk about geopolitical environment. Topical in April, of course, was tariffs. That hasn't gone away, but it's changed a few times in the months since. And also a few other matters have emerged in a big way, including taxation and the conflict in the Middle East. And because those are difficult matters, I'll pause and I'll defer to Justin to talk about those, and as he talks about broader performance matters and investment outlook. And with that, I'll pass it to Justin.
Okay. Thank you, Mr. Smith, and Mr. Chair, committee members. As introduced, Justin Lord, I'm the Senior Executive Managing Director, Global Head of Public Markets at AIMCO. Certainly our privilege to be here today. I'll try not to be too repetitive with respect to the wrap-ups. I have a few points with respect to total fund performance, asset class performance, then some commentary, brief commentary as it relates to current positioning and outlook. As Ms. Jones had outlined, it was a very good fiscal year for the fund, generating 9.7% returns, however underperforming the policy benchmark by 40 basis points. The 5-year net return sits at 9.6%, outperforming both the CPI-based and the passive benchmark by a healthy 220 and 110 basis points, or 2.2 and 1.1% respectively. And lastly, to recap the 10-year rate of returns as well, the fund sits at a positive 7.4%, which exceeds both of those benchmarks as well by a 0.9 and 0.7% respectively as well. Looking at the annual results, and this will follow along within the the draft report as well. Fixed income and interest-bearing securities in the portfolio generated a positive 7.5%, outperforming the benchmark. We can get into some of the details perhaps in Q&A or later on, but this was, this asset class has struggled over a longer period of time given the direction of interest rates as a whole. Largely driven by contributions across the universe bond portfolio, the private debt and loan portfolio, and the mortgage portfolios. Inflation-sensitive and alternative assets, as Ms. Joan alluded to, this does make up approximately 30% of the fund's asset mix, returned 4.7%, underperforming benchmarks by 1.5%. This was focused in positions amongst the real estate and renewable resource portfolios, with both asset classes trailing their benchmark over the short term. Public equities, in general, had a very positive year, with the equity composite returning 14.2%, outperforming the equity composite benchmark by 0.3%. Global equities led the way here, generating 15.2%, followed by emerging markets at 14.4%, both outperforming their benchmarks, adding value from an active management perspective. Within the equities composite, there were solid absolute returns from Canadian equities generating 13.3% and private equities generating 11.5%. Both of these, however, did lag their benchmark as a function of stock selection with respect to the Canadian equity composition. And from a private equity perspective, it does have a public market benchmark, and it was difficult for the private assets to keep up on that front. Long-term results within private equities still remain above those benchmarks quite handily, as we would expect to judge this asset class on a longer-term horizon as well. We typically do not receive appraisals for our illiquid asset classes in the first quarter of the year, so we would expect further updates coming throughout the year, both at the end of calendar Q2 and the end of the calendar year as well. AIMCO has been positioned and is currently positioned cautiously with respect to public markets this year as we navigate what is a seemingly unprecedented global trade and geopolitical environment. We are actively monitoring the changing trade environment as well as any potential legislation that could impact global trade flows, having a potential impact on macroeconomic activity and global growth. Also, on our risk radar, obviously the continued cycle of escalation with respect to the Russia-Ukraine war as well as the conflict in the Middle East. Equity markets and fixed income markets have had a volatile start to the year from a calendar perspective, but looking at those returns year to date, it might go unnoticed if not looking at the events of April. Equity markets in general are up year to date, with Canadian and European markets leading, followed by emerging markets, and we actually have a new high today on U.S. equity markets post the recovery in April overall. Credit markets, quite a similar story, with a little bit of volatility that we experienced in April, have returned to fairly tight or high valuation levels that we had been witnessing throughout much of the last couple of years. With respect to illiquid asset classes, we obviously don't see the same day-to-day mark-to-market or volatility that we would as in public markets in general, but we have seen a muted amount of activity as a function of the uncertainty across the broader investing and risk environment as a whole. That translates into lower deal flow, lower transaction activity, etc. Throughout the year, we will be continuing to monitor the impact of policy and geopolitical volatility on markets and macro data, paying close attention to large cap equity earnings, and the changing employment environment or any potential consumer trends that could be signs that there are impacts upon the economy that could change the future path of growth, in turn an impact on asset valuation or asset performance as it relates to the fund's exposures. The portfolios have ample liquidity and risk budget to take advantage of any market weakness or volatility as it might present itself in that type of environment. That'll conclude my prepared remarks from a performance and outlook perspective. Perhaps I can hand it back to Mr. Chair.
Thank you all so much for your presentations. With that, we'll now go to our question and answer stage. So with that, do any of our members have any questions for Treasury Board and Finance or AIMCO? Mr. Kayonde.
Thank you, Mr. Chair. Question about, I'm just trying to figure out what the Q4 performance was versus the passive index. I think that it's reported, Q1, 2, and 3 are reported separately, and Q4 is reported in aggregate. Do you have the specific breakdown of what the Q4 performance versus the passive index is, the alpha generation?
That would do. Would you like
Go
me
ahead.
to jump in on that? Q4 net returns, as referred to by AIMCO data, I would have to cross-reference with the report, would be approximately 67 basis points absolute return versus a policy of 56 basis points, a slight value add of approximately 0.11%.
So 11 basis point value add, is that right, or 1.1?
I
Sorry,
believe 11 basis
11
points.
basis points,
Yeah.
okay, thank you. So, which is great, I mean, thank you for that. It looks to me like overall, the value add has been a little bit volatile over the last 2 or 3 years. And indeed has been negative for a few quarters. It looks to me like a major reason for the improvement in value add over the 5-year term, as compared to last year's report, is that one horrific year, the 2019 year, fell off. Can you talk a little bit about your expectation? Because I believe that we're like it's not enough that we that we exceed the passive benchmark, but that there is like a 100 basis point hurdle rate that Albertans are entitled to, and it looks as though it seems like it's kind of difficult to come by if we just exclude 2021, for example. It's been volatile and relatively low. Is this concerning to you? Is this kind of where you see yourself being on track, or do you think that improvements are possible here?
So from our perspective, you're 100% correct with respect to the shorter term analysis. I'll refer to the 10-year returns, which would include those difficult years at the beginning of the pandemic, 2020 in particular, and with the 10-year returns sitting at 7.4%, both 90 and 70 beeps, 0.09% and 0.9 and 0.7% above the respective benchmarks. That is obviously a positive indication from a value add perspective. We are striving to hit those excess targets within risk budget. So improvement definitely can be made and is being made, has been made through a number of the strategic adjustments from 2021 to today, to be quite honest, as it relates to the product platform, the broader risk review within the internal processes, and I think we have seen a correspondent response in performance since then as well. This is a ongoing focus of any investment management team, AIMCO in particular, to ensure that we're able to generate the top quartile, the required returns on a risk-adjusted basis that our clients deserve.
So, yeah, thank you to AIMCO and Treasury Board officials for being here today. As you know, the overall goal is to grow to at least $250 billion by 2050, and we're implementing the reinvestment strategy already, and that's staying in there and being reinvested. So it's moving in the right direction, given the economic uncertainty can be difficult to predict. And Albertans should feel the fund can ensure a secure, stable future. But on page 3 mentions the Heritage Fund Opportunities Corporation and its role in securing this future and helping to get to that point. So can the minister highlight the specific processes or decisions that the Opportunities Corporation will manage?
Thank you for the question. Surely the Heritage Fund Opportunities Corporation is really meant to professionalize the management of the Heritage Fund, which up until its creation had been managed through the Treasury branch within Treasury Board and Finance. It's meant to bring professional expertise to bear with respect to the asset allocation decisions, investment policies, investment strategies, and it's meant to have a dedicated resource to develop those parameters for the fund. It does have a specific mandate from the minister to grow the fund for the long term. Sorry, it's meant to focus the attention of a professional group of staff solely on the Heritage Fund rather than as a component of the treasury function within the broader government. It's still being stood up, obviously. We do have a board chair in place, Joe Lougheed, that's been announced publicly. We have been recruiting for the board. There have been no announcements to the board as yet. There will be an inaugural board meeting in the coming months, at which time the investment policies, the investment strategies will be debated, will be approved. That will be done in consultation with Treasury Board and Finance, with AIMCO, and with whatever staff are brought into the Heritage Fund Opportunities Corporation.
But on page 3, it also mentioned transparency and independent decision-making. Can Minister outline how transparency is achieved in the broader framework? Just, if I could just, how are you going to manage it?
I mean, the corporation will have its own financial statements. They will be audited by the Auditor General. They will be released publicly and available for scrutiny. The intent, once the corporation is stood up, is that it make the investment decisions, the asset allocation decisions, the investment strategy and policy decisions independent of ministerial oversight. I mean, the minister ultimately is responsible as shareholder of that corporation and has responsibilities under the Heritage Fund Act for the Heritage Fund itself. But the intent is that it very much operate independently and with its own decision-making capabilities.
Thank you.
Any other questions from anyone in the room? Go ahead, Mr. Canaday.
Thank you. So I note that in your communication about geopolitical uncertainties, one thing that did not come up was Alberta separatism. We have a member of this very committee who said in May of 2025, many Albertans and others are concluding that they and their families would have more freedom and prosperity leaving Canada, and endorse separatism by saying it's time for Alberta to explore other options. We have a premier who said she's not going to prejudge what citizens are going to do for a petition, and said that she supports sovereign Alberta. We also have Nancy Southern, the CEO of ATCO, said that she cannot start a hydrogen project with separatism on the table because her partners will not pursue it without investment certainty. The CEO of the Calgary Chamber of Commerce, Deb Yedlin, said that she was concerned about the ripple effects of separatism conversations can have. The Business Council of Alberta has said that his members do not support separatism and said it won't build a pipeline any faster. On page 7 of the annual report, roughly a third of the funds are Alberta-based investments, of Alberta-based investments are in real estate. Under the threat of separatism, is it likely that real estate values will remain the same, increase, or decline?
Yeah, in a higher probability, if the probability rises to a certain point, I think it would make sense that there would be pressure on valuations of Alberta-based assets, certainly. One of the ways that we address that, obviously, you reference the report, what the holdings we have, but that, we invest so much outside of Alberta to globally diversify, to hedge against those sorts of, or to protect against the sort of local risks that crop up in many jurisdictions, this one being very close to home.
If I could just supplement.
Mr. Thompson.
There you go. Thank you. Just to supplement, and I will point out that the investments currently made in Alberta are made not for political reasons, but for their financial viability and for their expectation of investment growth and return. That is not expected to change going forward, irrespective of the political environment. the motivation, I mean.
So that actually leads in perfectly into my follow-up, because we do have a mandate here to run this fund for the benefit of Albertans and with return expectation. If it seems as though it logically seems then that as the risk of separatism has increased, it seems very likely that we will be going to a referendum next year, as that is what the Premier wants. As we get closer and closer to a separatism referendum, do you anticipate? Yes.
Point of order?
Point of order's been called.
Yeah, just on 23 IJ, HIJ, there's a bit of false accusations there. And also, I think we're here to review the report, and we're not here to speculate on future things and how they may impact. So if we should be talking about the actual report and have questions revolve around it.
Rebuttal, Mr. Kennedy?
Yeah, I do not believe this is a point of order. I believe that every investor in Canada is assessing the risk of separatism in Alberta, just as they assess the risk of separatism when making investments in Quebec. I believe that if we are not to discuss separatism in this committee, the government should not be talking about separatism, and members on this committee should not be supporting separatism. And so I think that this is, I have consistently referred to language within the report, and so therefore this is not a point of order, because this is a question of legitimate debate regarding the Alberta Heritage Savings and Trust Fund and its investment strategy and results.
I didn't actually hear a question when you were mentioning that, but I would ask that you tie your comments to your question and just stay within the lines if you can. That'd be great.
Thank you, Mr. Chair. So the question is, because Mr. Thompson, you said that the mandate to generate high returns is not going to change. How is Treasury Board and Finance and AIMCO assessing portfolio changes in regards to separatism?
With respect to Treasury Board and Finance, we do not have a specific mandate to assess the financial impact of separatism. It's not on the radar as a significant financial risk at this time.
From an AIMCO perspective as it relates to investment strategy. Apologies. From an AIMCO perspective as it relates to investment strategy, our stress testing from a risk management and scenario analysis perspective has centered around geopolitical risk, tariff and or global trade volatility risks. We have not run sensitivity analysis as it relates to the risk associated with an Alberta separatist action.
All right. Mr. Wright, did you have your hand up for a question?
I did. Thank you, Mr. Chair.
This is the note 6 of the financial statements you're looking at?
Yes, I believe so, on page 34 of the annual report.
Yeah. That was driven, so when we look at the total proportion of what's invested in the fund, interest-bearing securities were 23.6% in 2024 and 23.9% Keep in mind that the interest-bearing securities section includes mortgages and private debt and loan as well. So you'd see an appreciation of those securities, which would lead to that. There was no additional allocations made per se to the cash.
Okay. All right.
I can start from the asset allocation side of things and have AIMCO pick up from a return perspective. From an allocation perspective, as my colleague Mr. Thompson has stated, the Heritage Fund Opportunities Corporation is taking a look at the investment strategy, and any changes to the asset allocations will be subject to approval by the HFOC board. So at this moment in time, I can't say for certain exactly how that asset allocation is going to change, but the board and staff will be looking at options there. To pass it over to AIMCO from a return perspective.
Thank you, Ms. Jones. And forward-looking returns will be a function of the interest rate environment, the credit environment, valuations, et cetera. I would not expect, as of the current day, that we would have a similar rate of return next year for interest-bearing securities, just given the benefit that had occurred from interest rates moving lower. As an example, the Bank of Canada 10-year interest rate over the fiscal year for the fund moved from approximately 3.5% to 2.9%. Given the duration exposure, that would have been a very positive tailwind for the exposures overall, as well as a fairly benign or overall not too volatile credit market, or an area where you were generating returns from both the credit exposure and the rate exposure. Overall, the forward-looking rate of return will be a function of those interest rate changes and income distributed by the portfolio as a whole.
And if I may, just embellish that a little bit. Longer-term expectations over time, we're looking at, for most fixed income securities, government securities, investment grade returns in over the longer horizon of around, call it lower to mid-single digit returns.
Well, thank you for that.
I'll get back to you, sir, if that's okay. Just want to see if anyone in the room has another question.
Want to go? Sorry.
Go ahead, Mr. Keonde.
I'm sorry, did he have another question?
He did, but we'll go back to
Okay.
you. I gave him two. We'll
Okay.
turn to you and we'll go
All right.
back to him.
Thank you, Mr. Chair. Looking at currency risk, because suddenly this has become a big deal. Since Tariff Liberation Day, the US dollar has materially weakened. And that is risk to, from my reading of, and common sense, I believe that the every penny of Canadian dollar strength amounts to, was it $660 million, I think, of fair value of the fund that increases. What do you think of, how do you think of the interaction between import tariffs in the United States, which should increase their currency, with just basically going back to the macro I remember from 25 years ago, to versus the, it looks as though the U.S. has become less secure place to invest money, and therefore financial flows are actually declining, tending to reduce the value of the dollar. And so far, it seems as though it's that financial flow impact that's dominating. How do you see that going forward, and how are you assessing risk around that, especially given the investable universe of in advanced economies?
Yeah. So this is the question that's on a lot of people's minds. You know, whether the U.S. dollar are the historical patterns going to that we've seen over the last decades going to carry on going forward. It's a question in a lot of people's minds. It's a very good question. You noted correctly what's happened over the last few months, and we bear in mind that the administration in the States has been in place for 5 months, and we've seen some unintuitive or unexpected moves in the currency over those 5 months. That said, it's likely still far too soon to come to any conclusions about the general properties of the U.S. dollar. And so we're looking at this with great interest. We haven't changed our view of the world based on the last few months. That said, it is something that we're actively watching over time and expecting to revise our thoughts on it as appropriate. But no major changes at this point, sir.
And so, I mean, it seems as though, I think if my math is right, the Canadian dollar has strengthened by about 6 cents since April, something like that, depending on the day you take as your baseline. And you did correctly point out that 5 months is a very short time. Do you think that a government that is hostile to investment and engaging in clearly negative activity for its own government, for its own people, can materially alter the investment climate and the ability of society to take in foreign capital so materially within such a short period of time as 5 months? Could this be permanent? Is that feasible?
That is certainly a risk that we're discussing as an organization. I think the implications there span beyond just a currency or U.S. dollar exposure perspective and impact the global flow of trade, the global flow of investment dollars, and the potential productivity or profitability of U.S. equities as a whole. With that, from a bottom-up perspective, and as an example, we are underweight U.S. equity markets within the composite in favor of Canadian emerging market and European exposures as, I will say, more on a valuation-led thesis than a potential, contagion thesis on this front. But that is something that is certainly a risk to the future multiple or the premium that we have seen being built into U.S. equity markets as global leaders should this volatility from a policy perspective continue.
Okay, thank you.
All right, Mr. Wright. The floor is yours, sir.
Well, thank you, Mr. Chair.
Okay, thank you for the question. If I skip over one of the points, please remind me. The real estate performance, as noted in the report, the performance of the real estate asset class in general has suffered as both an industry on a total, from a total return perspective, since the pandemic, and has within the IMCO portfolio also underperformed those numbers as a function of the composition of the Canadian and the global real estate portfolios. Our conviction in the asset classes do remain very strong. We're confident that the market is beginning to turn around for certain segments of the real estate market, where we are seeing rent growth and or a net operating income growth as it relates to industrial logistics properties, multifamily properties, high quality retail properties as a whole. The office market has remained challenged over the last number of years, in particular lower quality office. We're starting to see that A or triple A top tier office real estate perform well or better in this type of environment. As it relates to my prior comments with respect to private markets, the amount of activity has been somewhat muted. A number of potential transactions are still being assessed across the asset class, where we think there is good value currently to potentially grow the assets overall. I will say that with the one caveat that in general, most of our clients are near their allocations to the asset class, and so a lot of the activity will be more portfolio management-led transactions than necessarily increased allocations at the total portfolio level. Anything else to add on that?
No, I think that covers it.
Did you have a follow-up, Mr. Wright? You're okay?
Not at this point in time. I'll turn it back over to you, Mr. Chair.
No worries. Thank you so much, sir. Ms. Kionde?
Thank you, Mr. Chair. So, going back to my previous question, I guess, if government, and I completely agree, totally agree with your, Mr. Lord, with your viewpoint that backing away from the U.S. market should not be something that's done on kind of on a what might happen kind of way, rather than like looking at valuation. And yet at the same time, of course, the valuation comes from the overall political environment. And so, you have to discount U.S. growth, you have to discount U.S. financial flows. And that will, in and of itself, when you look at an overall business level model, reduce the value that you're prepared to pay for that. Wouldn't you also expect that to happen if the separatism conversation takes hold here in Alberta?
I think that's a logical conclusion on a smaller scale, but we have not conducted any analysis on that front.
Okay, thank you. Secondly, so have you looked at then your analysis of UK assets, what happened after Brexit, and did you have assets in the UK, and what happened to your marks on those?
We certainly do have assets in the UK. I don't have the specific sensitivity analysis in front of me at this time, and would be able to follow up on that if I might, but that is a logical comparison.
Thank you. I'm very interested in seeing that. Yeah, because we now have, I think, 5 years of history.
All right. Next, we shall go to Mr. Stefan online. The member for Red Deer South has the floor.
Wonderful to be here.
Thank you for the question. And following on the real estate commentary, we'll touch on worst first, and with the obviously the benefit of hindsight. But real estate was the only negative performing asset class on a 1 year basis. I'm excluding the strategic opportunities given the very small size and nature of that allocation. And for the reasons previously mentioned, as it relates to the overall impact on net operating income across the real estate industry as a whole. As it relates to the best performing asset within the annual report, it'll be noted on page 11, within equities, global equities in particular, with a benefit from earnings growth and multiple expansion as witnessed in U.S. equities in particular, which make up approximately 70% of the global developed equity indice, would lead to that being the largest contributor. Within that portfolio as well, there was 120 basis points or 1.2% of excess return generated as a function of the portfolio construction as it would relate to a number of both internally and externally managed mandates in the equity product at AIMCO.
If I may, I think that there was a question about lessons learned as well. And so Mr. Lord took the asset class level, which I think is entirely appropriate. But I think the lesson learned, and forgive me if it seems a little bit trite, but in any given year, it's difficult to know exactly what's going to happen. So the importance of having a broadly diversified portfolio across asset classes, across geographies, across sectors is really of a paramount importance. Now, at the end of the day, the folks at Treasury Board and Finance are responsible for the asset mix, but that will, in due course, roll over to HFOC. But that basic principle of ensuring you're broadly diversified, because it is virtually impossible to predict with any degree of precision, is a key consideration.
Mr. Stefan, did you have another question?
Yeah, sorry, you made a comment that Treasury Board was responsible for the asset mix determination. I didn't think that they were responsible for the asset mix determination. I thought that was...
No, so the minister under the Act is responsible for the asset allocation, and those responsibilities have been delegated to the Department of Treasury Board and Finance, and specifically the Treasury and Risk Management Division. So the asset mix is actually landed upon at the department level.
Thanks, I learned something.
Thank you for the question. The Heritage Fund Opportunities Corporation will have the mandate to be the one determining the asset mix, as we've just discussed, now lives with the department. And they will have independence as to how that asset mix is arrived at, And they will also be responsible for the development of the Statement of Investment Policies and Goals that directs the investment of the overall fund. So they will be the oversight portion of the Heritage Fund itself. So the fund itself won't change. It will just simply be directed by an independent corporation rather than by a division within the Department of Government.
Okay, I just wanted to, kind of just
So I think the way to think about it, I think, most cleanly is to think that the Heritage Fund Opportunities Corporation, as a client of AIMCO, will be on equal footing as the pension fund corporations that now exist. So at the moment, all of the pension fund clients of AIMCO are represented by independent corporations, so teachers and PSP. Whereas the Heritage Fund is represented by government, solely, trusteed by the minister. The corporation will simply add a new layer, add an independent corporation responsible for the management of the fund. So nothing is coming away from AIMCO. AIMCO is simply receiving its direction directly from the Heritage Fund Opportunities Corporation rather than from the department.
Okay, thank you.
Do we have any other questions on the lists? Mr. County, go ahead.
Thank you, Mr. Chair. I know this doesn't matter at all because it's tiny, tiny dollars, but I'm really interested in how deposit and short-term can how those returns can be so variable represented with respect to the passive index. It's just a real curiosity because I think it underperformed the passive index by, I don't know, am I seeing this right? Like 100 basis points in the last year, and it outperformed by 260 basis points over the last 5. Can you talk about that a little bit?
That's actually a great question. Thanks for asking that. I'll start. So there was actually a benchmark change that has happened. So our colleagues at AIMCO had mentioned that they had gone through all of the different product descriptions. And so one of the changes was that the Heritage Fund used to use a universe bond benchmark for the cash allocation, actually. So when you look at it over 5 years, that's mostly what you're seeing. And so that's why you'll see some variability there. We've recently changed it. So now it's actually the same as the AIMCO benchmark and the product description, which is the 30-day T-bill. So that's one of the reasons for the variability. But if there's an additional...
It's as I was preparing for this meeting, I looked at the numbers and I had exactly the same question earlier this week and got exactly the same answer, that this was it was a benchmarking issue, because I know well the money market product we have has done nothing crazy, has not deviated from the benchmark that we use.
Money market.
And it is a liquidity driven or a motivated pool as opposed to a value add pool. And so no, I understand your concerns for seeing that number, and I shared them, but I've now assuaged that the reason is administrative and not financial.
Thank you. That's the best possible answer. Because reaching for yield in money market is... I want to thank you, really, from the bottom of my heart, thank you for the additional disclosure that you've seemed to have provided this year around top holdings. I think this is something that the people of Alberta have been asking for a long time, and I'm really glad that you've put it out, because it allows the people to see kind of how their money is being managed. But of course, no good deed goes unpunished. So I have some questions about about those names, and especially around private equity. Howard Midstream, I didn't realize was actually a significant material part of the overall Heritage Fund, accounting for I believe $690 million. $590 million. Is that now? Is that cost or market? Or can you just tell me more about that? Is it that's cost? Is it market? If it is market, what's the cost base on that? What's AIMCO's share of Howard Midstream overall, and the Heritage Fund's share of that pool in AIMCO? Just kind of what that business looks like.
Happy to take that briefly. That would be the current value or the most recent valuation of Howard Midstream, which sits within the infrastructure products as a whole. I don't have the specific cap table in front of me to be able to relate the exact percentage of shareholder ownership or how that flows through to Heritage Fund. That can be a follow-up item as well. This has been a successful investment for clients of AIMCO overall, as one of the leading processors and gatherers of petroleum products in the Delaware and Permian Basin. A long-standing relationship with the infrastructure team, but we will look forward to following up with more specific details as to the concentration.
Thank you.
With that, we'll now go online. I believe Mr. Weeb had a question.
Yes, thank you, Chair.
We'll defer to AIMCO on that, actually, it's specific to the asset.
Certainly, we will confirm, but I'm quite certain for your second question, it would be a function of valuation increases within the portfolio. And speaking specifically about the underlying holdings within infrastructure that led to the excess return as it relates to valuation increases in a number of the fund positions within the allocation across holdings like Candu Rail, Puget Energy, and most specifically the sale and disposition of our investment in the Asia Pacific based data center company AirTrunk, which was a commitment made by the infrastructure team of approximately $400 million, exited last year for over $1 billion at north of a 30% IRR. So maybe going back to one of the earlier questions, that's probably the best individual transaction that we had seen at IMCO over the recent history.
And one embellishment on that as well is by selling AirTrunk, of course, that increases the concentration in other assets such as Howard Energy, which is part of the reason that Howard Energy has risen as well.
Thank you for that.
Mr. Weeb, did you have another follow-up?
Sure. So,
Again, we'll defer to AIMCO. This is specific to the investment side.
Certainly the exposure and the weightings of the exposure would be impacted by the degree of outperformance that we had seen in global developed markets as a whole last year. That would be the largest contribution. Around the margin, there would be incremental changes as the active weightings of individual securities representing sectors and country exposures within the products do change as valuation changes, as risk changes over the course of the year, as new products are added or rebalanced, et cetera. The largest contribution there would not have been the active reallocation or tactical bet between the four categories of equity products, publicly traded equity products that you see. It would have been a function of the outperformance associated with global developed equities as compared to emerging markets, privates, and Canadian equity markets, in particular, the U.S. equity market.
Thank you so much for that. Mr. Kionde, go ahead.
Thank you, Mr. Chair. Looking at the trend on investment expenses, it looks as though in-house AIMCO expenses were up 27%. And while I do appreciate that expenses as a percentage of assets under management are down, assets under management increased by $2 billion just because like it got an extra chunk of money that is like in short-term money market that has no expenses attached to it at all, or very small, and it's not because of higher returns in like private equity portfolios, for example, because those are also down, and so. What's going on with a 27% increase in expenses at AIMCO? Yeah, that's a question.
It's a good observation, and that's really driven by the changes that have happened organizationally in the sense of shuttering of the Singapore and New York offices, and some of the other staffing changes that happened through the year. So these are really more one-time events related to those factors than any general trend in cost.
That's actually my follow-up, is how much of those expenses in terms of a dollar amount are related to shutting down one or subleasing one Vanderbilt, the Singapore office, closing out the private debt strategy. I imagine that there were some very expensive people that needed to be severed, and as well, like, are there any dollars in that number for winding down the private debt strategy, or is that portfolio as it exists? Was there actually private debt placements that now have to be like monitored in some way, or are you going to sell them in a secondary market? Like what's how are you winding that piece of the business down?
Take the latter part of the question first as it relates to the private debt and loan business, and my colleague, Mr. Smith, will cover off on the cost commentary. We are not winding down the private debt and loan business. Overall, this has been a very successful asset class and a well-established asset class within AIMCO, where we actually see a number of clients increasing allocation given the growth in private credit markets overall. We think that's a trend that continues and likely an area where clients will continue increasing allocation, certainly given the current valuation environment that we're seeing across equity markets as it would compare to private credit as a whole. The private debt and loan portfolio is probably the most liquid of the illiquid or the private asset classes as a whole, but it is not in wind down mode, just to clarify, as a function of the changes which were more isolated to corporate strategy and office location. I'll let Mr. Smith talk to those items.
Yeah, I don't have much to say because of the specifics and the dollar values you asked for. I don't have those, so we'll leave that as a follow-up item for me. Yeah.
Okay, thank you.
All right, next we have Jackie Armstrong-Hominick. Ms. Armstrong-Hominick, the floor is yours.
Hello, good afternoon.
I can start with that one. That's a great observation. We don't want to be overly prescriptive to AIMCO in certain aspects of managing the portfolio. As my colleague, Mr. Thompson, alluded to earlier, the department is responsible for the asset allocation, which means broadly giving a long-term policy asset mix. Within that asset mix, there is some latitude that's also given to the investment manager to generate returns. And in that, you will see that there is a dedicated allocation to Canadian equities, and that is a function of being a Canadian fund. However, from the emerging markets standpoint, that prescriptive nature is not there. So this is one where we would give more general leeway to the investment manager rather than specifying a direct target amount. Yeah.
Thank you, thank you.
Yes, please go ahead.
Okay.
Certainly, thank you. Emerging market equities have underperformed global equities for a number of years. We are starting to see that reverse as a function of, in general, dollar weakness and stable economic growth in a number of those countries. Specifically on the active side, emerging market managers and the emerging market product has struggled to add value, and we have transitioned a number of the strategies within the product. We'll be working with our clients over the next number of quarters and into 2026 to ensure that all of the equity products enable the structural and competitive advantage of the platform to ensure that they are meeting their asset allocation needs from the underlying equity beta, and that AIMCO is able to more consistently generate excess return across their products using Global Developed as a prime example.
Mr. Kionde, go ahead.
Thank you, Mr. Chair. Getting back to Howard Midstream, and I apologize. I love that because I know a little bit. I know a thing or two about Midland and Delaware Basin midstream operations. So if you could, when you follow up, if you could also provide some insight and color into whether these are primarily acreage dedications. And because that sets up risk as rig counts decline, which they are right now in the Permian, and as well, to the extent possible, whether there's any exposure to NGL pricing or fractionation spreads, and as well, did Howard originally pay for acreage dedications in the State Line Permian area? Because that was a thing that was being done a lot. When these large acreage dedication positions were being put together in the 16 and 17 timeframe. Secondly, S-Power is another very large partnership that you have in energy. And I'm interested in kind of similar metrics around what is it at cost, how much liquidity has been injected for project build-out. Kind of the cap table, what the share is of that, what the leverage is in the structure. And finally, you may be able to answer this. What's the impact of the various provisions of the Inflation Reduction Act that are being repealed on that portfolio? And is the asset geography, is that primarily ERCOT? Is it, throughout the rest of the, I believe AES is primarily Midwest. So is it contiguous with AES's operations, or is it more, dispersed? And how much of the valuation is based on the cash flow producing assets versus the development pipeline?
Part of that.
Yeah,
Sadly,
I know it's a lot.
The details I won't have, but I can give you a little bit of color on the Inflation Reduction Act because and the consequences of the repeal, because that is a question that's been on our minds, and I had a chance to speak with our head of infrastructure about it just this week. And so if you forgive me for answering a slightly different question than the one you've asked, but it's It's a, so the IRA, as we would call it, was important for certain technologies like carbon capture, hydrogen, et cetera. And so the repeal of that act, many of those things, the projects that were related to those things will likely fizzle as a result of the repeal. Renewables, though, generally speaking, have become economic these days without the need for the subsidies of the IRA. So, of course, there's going to be some impact, but those things are more cost competitive now. And the fact of the matter is, given the way the world's growing and AI and everything else, we need every electron we can get. So renewables are feeding into that broader production stream and our economic. With respect to AES, that specific name did come up in our conversation, and the tax credits associated with the IRA, they die if your assets are operational after the end of 2020, after 2028, and they'll lose eligibility at that point. We're in good shape with AES. All those projects that are in flight with respect to AES are expected to land before that date, so we'll be getting the credit. So with respect to our portfolio, not expecting a significant impact because of the changes in the IRA. And one thing that, of course, sentiment in the space is one of the largest victims of that. A lot of smaller players are going to get shaken out, but we're very fortunate. We're in good position and should not be hurt significantly by this.
Thank you very much.
Is there any other questions we have online? Mr. Stefan, go ahead.
Aye. Thanks.
If I could, I'll start that one off if you don't mind, Mr. Chair. And I'm not going to argue with Warren Buffett. It's not something that's worth doing on the record. But one of the fundamental beliefs, one of the fundamental investment beliefs, as stated by the minister, is that active asset management adds value. And that is our expectation of AIMCO, and that is why we have benchmarks in place to measure the value add that AIMCO brings. In terms of comparing the Heritage Fund to Norway, as much as we've seen substantial growth in the Heritage Fund over the past few years, we're talking about a $27 billion fund versus something that is north of US $2 trillion in size. Very different investment mandates. Norway invests globally in pretty much everything other than Norway. So their investment mandate is to basically buy all of the investable universe that is available to them outside of their own country. And it's a very different investment strategy. When we get to $1 trillion in size, maybe we will look at something different. But our aggressive growth strategy, our aggressive growth targets that the Minister and Premier have referred to with the Heritage Fund in recent days, lend themselves more correctly, I think, to an active management strategy. And I'll just pass over to AIMCO to just weigh in on what they feel about active management.
Yes, certainly. And as it relates to Mr. Buffett's comments, who I will not argue with or refute as well, AIMCO has access to a number of different strategies or tools or products to generate active return on top of their benchmarks, as would be compared to a retail or an individual investor, as a function of the structure, scale, and team overall. I think the team in particular does use passive strategies where it makes sense within the equity products right now, either synthetically or physically. So achieving that exposure via derivatives markets, either futures, options, or total return swaps, to then allow for liquidity to be used in the form of either absolute return or stock selection strategies to seek that excess return. And I think so, coming back full circle, concentrating the exposure in a passive benchmark only really is it just a different form of risk taking at the total portfolio level. You'd be giving up the decision making to an index provider essentially, and in the case of the U.S. market or the S&P 500, which Mr. Stephan pointed out has performed very well over the last 10 years, it is also currently quite expensive and concentrated from a sector composition perspective. Not that those characteristics would mean that becomes uninvestable, but it fits within the diversified approach of the fund and our clients overall of maintaining equity exposures that's broadly diversified geographically to ensure a lower risk rate of return over a longer period of time.
I think I might just jump in on that as well and just say it sort of relates to something that I talked about a few minutes ago. There's no denying what the S&P 500 has done in the last while. But one of the, and if I'll let the Treasury Board and Finance folks kick me under the table if I'm getting over my skis here, because they are responsible for the asset mix. But one of the reasons you see asset mixes like we see with a Heritage Fund is to provide a smoother ride than you would get from the S&P 500. We've had some great numbers the last little while. To be sure, we've seen some horrid numbers out of the S&P 500 over periods of time, and we will again in the future. I wish I could tell you exactly when, but if I knew that, I wouldn't be here. So just bear in mind that we're not only looking for return, but we're looking for a risk-moderated return over the long run, which is why we have the broader diversification.
Thank you so much for that. Ms. Keonde, did you have any final questions for our guests, or?
I'm good. Thank you. Thank you very much, Mr. Chair.
Fantastic. With that, do we have any other questions from anyone on the lines today? I see none. So, if there's no further questions from any of the members, I'm going to call for a motion to approve the Alberta Heritage Savings Trust Fund 2024-2025 annual report. Can I get a motioner for that? Mr. Rosewell moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the Alberta Heritage Savings Trust Fund 24-25 annual report. All in favor of in the room, please say aye. Aye. On the phones, can I get an aye? Anyone in the room or on the phones reject this proposal? I see none. So with that, the motion is carried. And should we let them loose? All right. We will allow our good friends from the Treasury Board and Finance, as well as AIMCO. We want to thank you all for your time. Hope you enjoy the rest of the afternoon, what's left. Thank you guys so much. We really appreciate all your hard work for Albertans.
Thank you, everyone.
Yeah. I really want to keep them all afternoon, though. With that, everyone, This is where the deep discussion gets in, and that is our annual public meeting. Honorable members, at our last meeting, the committee began planning its annual public meeting, which is required to hold under Section 6(4)D of the Alberta Heritage Savings Trust Fund Act. As members will recall, the committee decided to once again hold the meeting here at the QE2 building and to follow the same format we used at last fall's public meeting. The committee may now want to choose a date for that meeting. The meeting frequently has been held in the evening on the final Thursday in October before the start of the fall sitting of the Assembly. That would put this year's public meeting on Thursday, October 23rd, 2025, from 6 to 8 p.m. And again, this is for the public. And I'll also note that last year's meeting was held during the first week of session, and if members prefer that, we'd be looking at Thursday, October 30th, 2025, from 6 to 8. So, do I have any suggestions, proposals, pitches for a date and time? Or do you guys think that these might be fine? October 23rd or October 30th?
Are you going with so we'll either accept either one and then you'll make the decision, or we need a decision today on the date?
We need to make that decision here today.
Okay, well, I think it'd be easier for our Calgary colleagues to be here on the 30th. Or how do you feel about that?
I think it would be easier for our non-Edmonton and non-Calgary colleagues as
Right.
well to be here on the 30th, so.
So I think that'd be good then. So I'll move it for the 30th then.
All right, I have a motion that we look at Thursday, October 30th, from 6 to 8 p.m. Is anyone good with this date? All right, so let's do this officially. Sorry, go ahead. Okay, sorry about that, sir. All right, sorry, I have to do this as a proper motion. So Mr. Rosewell moves that the Standing Committee on the Alberta Heritage Savings Trust Fund hold its annual public meeting on Thursday, October 30th, 2025, from 6 to 8 p.m. at the Queen Elizabeth II Building. All in favor of in the room, please say aye.
Aye.
On the phones, agreement?
Agreed.
Agreed.
Does anyone on the phones, on the video, disagree with October 30th? Perfect. That motion is carried. Thank you guys all so much. And at our last meeting, the committee was tasked the Legislative Assembly Office with creating a communications plan to advertise this year's public meeting. The report was made available on the internal site ahead of today's meeting for members to review. Ms. Sorensen from LAO Communications Services is here online to go over the plan and respond to any questions that members may have. I will now turn it over to Ms. Sorensen.
Thank you, Mr.
Thank you so much, Ms. Sorensen, for that. Does anyone have any questions or comments for Ms. Sorensen? Go ahead, Mr.
Yeah, just the notion of spending money on X, on Elon Musk's platform, using taxpayer money to for the benefit of somebody who wants Canada to become the 51st state is not, I think, something that we should be doing.
Your objections noted. Any other concerns, questions, comments?
If I may, Mr. Chair, I just want to point out that we actually have a number of free advertising dollars that
We certainly want to maximize our exposure. Is this like a personal issue, or do you object to that medium being used? Because it is considered one of the most largest platforms to get information out.
My objection, and I believe the people of Alberta would also have an objection to taxpayer funds going to Elon Musk. And so I believe that we as a committee should not be advertising on Twitter.
Yeah. Noted. Mr. Wright. Oh, Mr. Wright, you're on mute.
My apologies, everyone. And I really appreciate the fact that
Ms. Kennedy, how do you want to push this forward? Do you want to make an actual vote on this? Is this something you just want to comment on and just for the record?
Yeah, no, I'd like to do a motion on this, please.
Okay. Just give us a moment here. We might not have the words exact, but I would assume that the motion would be something along the lines that the communication plan be amended to remove the use of X in advertising for the public meeting. Is that fair?
Correct, yes.
All right. With that on the floor, I'll open that for, well, we kind of had a discussion. Any other comments, questions, queries on that motion? Mr. Weed.
Yeah, thank you.
Any further comments, questions? All right, let's go to a vote on that. All in favor of the motion to remove X from the advertising platform, please say aye. Aye. On the phones, can I get an aye or an agreement towards removing X from the platform, from our communications plan?
Aye.
Mr. Ellingson
Aye.
and Mr. Berrar. Any others? All right, all in the room opposed to this motion, please say aye. Aye. On the phones, against this this motion?
again.
All right, then, that motion is rejected, or defeated. Thank you very much for that. Any other comments, questions for Ms. Sorensen? If there are not, I'll look for a member to move a motion to approve the draft communications plan. Mr. Rosewell moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the communications.
Lost audio with the room.
Can you hear me now? Check.
I can hear you.
Oh, perfect. So we have a motion on the floor moved by Mr. Rosewell that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the communications plan as distributed. All in favor of the communications plan, please say aye. In the room?
Aye.
On the phones, can I get agreement for this motion?
Agreed? Aye. Agreed? Aye.
All opposed in the room, please say opposed. On the phones, is there anyone opposed to this communications plan? I see none. That motion is carried. Thank you all so much. Are there any other issues for discussion today by any of the members? Ms. Armstrong Humenick, you're off mute. Did you have a comment, question?
No.
No worries, no worries. If there are no other issues for discussion today, our next meeting will most likely be in September after the release of the fund's 2025-2026 first quarter report. And if there's nothing else for consideration today, I'll call for a motion to adjourn. All right, Mr. Rosewell moves at the June 27th, 2025 meeting of the Standing Committee on the Heritage Savings Trust Fund Committee be adjourned. All in favor of, please say aye.
Aye.
Anyone object? Anyone want to hang out all afternoon with me? Oh, I'm sad inside. All right.
It's raining outside, so, we can hang out here for a while.
In Calgary, yes. All right. Well, it sounds like that motion is carried. This meeting is adjourned. It's been a pleasure, everyone. Thank you so much.